All right, we are live. Welcome to another episode of the Frost Factor. We've got Richard Lamotte with Movement Mortgage again. And today we're going to talk about FHA loans, and then I'll give a little bit of a market update for Onslow County. So just hold tight. Here we go. All right, we are here. Richard, how are you, sir?
Doing great. Another day in paradise. Thanks for having me, Dave.
Yes, absolutely, always. So here's our monthly podcast me and Richard will do. And, hopefully everybody out there is getting some good information on loans and kind of market stuff. And so oh, man, here we go. Look, see, live. You never know what's going on.
All right.
That's my CRM calling me. Somebody's calling me through my CRM, which is spam right now. But anyway, so look, so today we're going to talk about FHA loans, and they're out there, and I know a lot of people have a lot of questions on those. So tell us a little bit about those, Richard. What do we got on FHA loans?
Yeah, right before I go into it, if I hear good news, I always want to relay it. As we spoke earlier, we've got some positive changes to the COVID guidelines that started a couple of years ago that took a lot of people out of qualifying. Folks were getting penalized for having COVID or their works being closed down, missing significant time for work. Those guidelines should be loosening up here very soon. So I'm hoping here in the next 30 days to be able to line that out for everybody and really help some of those folks that were told no to hear yes here in the very near future.
Nice. Well, that's good. That's good news.
And then, so going into FHA, it's going to be the Federal Housing Authority, and it's under the umbrella of the Department of Housing and Urban Development, or HUD. It's a government program. It's less risky for lenders because they sponsor the loan whenever it's a foreclosure, short sale situation. Therefore, the lenders don't have as much risk. So that kind of passes on to the borrower, meaning less stringent qualifications. There's also going to be lower interest rates, much like VA. They're going to be quite a bit lower than what conventional rates will be, usually 0.25%, maybe even more. There's going to be gift funds are allowed, and the qualifications, the documentation needed is not near as strict as it is on conventional because there is down payment involved, even though reduced in this market. Paying down payment and closing costs can be a little costly. Sometimes folks need help. So gift funds are allowed. The credits allowed from a seller whenever the day comes, we're going to see those again. It's actually 6% of the loan amount. So that's a good number when that time comes, and I'm sure it'll come by next year, hopefully. It can't continue at this pace, I wouldn't think. Lower credit scores are allowed. Some banks, depending on who you're dealing with, 640, 620. With us and some of the other local lenders, it's actually as low as a 580 to qualify for an FHA loan. Also, a higher debt to income is allowed. That's something that's a killer when it comes to conventional. So many folks with student loans, it's good for them to have a choice when their debt to income is, creeping up to the upper 40s. So even if we have somebody lower credit score and we don't have an accept on the front end, I can still keep my debt to income under a 49 and offer someone a loan. That's a huge help.
Yeah. Okay.
Two of the things to think about is a government loan with low down payment. So there are going to be some fees added into the loan amount. Much like VA funding fee, it has what's called upfront mortgage insurance, which is financed in. And that's 1.75% of the loan amount, which is financed in. So a lot of people see the base loan amount after down payment. It's not going to match up what their actual loan amount is because of that upfront MI. FHA does have monthly PMI, and that's at a factor of 0.85%. So that's going to be in there for life. So a lot of folks, once they've improved their station, making more money, improve their credit score, probably would be a good idea after a few years to maybe refinance it conventional and get rid of that mortgage insurance in the future.
Yeah,
okay.
That's good.
Any questions? That's the main bullet points. And again, the positives of the low credit score. So many people right now, I'm seeing a big difference in credit score from a year ago to now, because folks that are working week to week, I mean, they're having late payments on credit cards and things like that, hurting their credit score. FHA gives them the opportunity to still try and get a new home.
That's good. So let me ask you a few questions, just like on maybe the, like from a seller's perspective, should they be concerned with an FHA loan versus a conventional or VA or?
Yeah, the only drawback for the seller's end, if you've got a home that has significant repairs, because the FHA appraiser is going to look in the attic, the crawl spaces, things like that. So if he sees structural issues in either of those, he's going to call them. So if, for instance, you've got a guy that has repairs, you probably don't want to accept an FHA offer. For the buyer's perspective, it protects them because it's going to make sure they've got a home that's structurally sound. Seller side, they might want to avoid accepting an offer FHA if they've got some issues.
Right. No, that's great. So what about investment properties? So I work with a lot of investors. So I know from the FHA, so like when we list it, my investor cannot usually sell to an FHA loan because there's not enough time frame of, I guess, ownership of the investment, right?
You have to have it 60 days. Contract cannot be written until 60 days after the actual closing date, or deed is transferred over to him. So that's the one big drawback with the investors. Do they really want to wait 60 days to put their house on the market? Not in this market.
Right. Yeah. I mean, especially for us. I mean, now what would you say, just, a guesstimate for you for FHA versus VA, for you on loans, like more VA, right? You see more.
Yeah, VA more than anything. When I first started close to 20 years ago in this market, I bet it was 95% VA, literally that high. But now it's probably closer to 80% now, with so many folks not going to banks and actually using mortgage companies that weren't in the military. Conventional USDA, FHA. So maybe 80%. That's a little bit of everything in this market as opposed to many years past.
Sure. No, I mean, I think that's excellent. I think, you've answered a question from the seller's perspective too, obviously on the, you did the allowance, you talked about the allowance and then, investor side and then, so that's good. I mean, I don't have any other questions on FHA loans. Do you have anything else you want to talk about on FHA?
No, not. I mean, that kind of covers most of it.
Yeah.
I mean, if we wanted to get into crazy questions, the idiosyncrasies, we could be here all day. But that's the big bullet points that most people should be thinking about. And as far as rates go, I know we keep hearing all this scary stuff, and it's really been kind of calm, more like a heartbeat since we had those two monster jumps, 2 or 3, however you want to look at it. Since then, even after the Fed met, it's been more like a heart rate. It goes up a little, then we get a knee-jerk reaction back down, knee-jerk reaction right back up again. But we haven't had this meteoric rise since they voted. So for the short term, that is some positive outlook. We're not seeing that monster jump quite yet since the Fed met just recently.
Good. Well, that's good. All right. So look, I'm going to go into some market stats from the real estate side, right? So interesting. So maybe interesting for you too, Rich. I don't know.
Course,
but so as of right now, single family townhomes and single family homes and townhomes active on market is about 445 right now in Onslow County. I'm only talking Onslow County right now.
Right. Sure.
445. So last year, now we go into a closed sale. So last year at this point, we had 3,505 homes sold, 3,505. Okay. This year, What do you think, Richard? We have more or less, you think, this year?
I think just a little bit less sales wise.
Yeah, we have more, just a little bit
more.
more. Well, I would say a little bit. So
Oh,
last year's 3505. This year's 3594.
how
So
about that?
almost about 90 more houses has sold so far this year. It's about 500, give or take 13 a month on average.
Sure.
Now, last year in July,
How many houses were on the market then? I'd be curious to know last year.
Yeah. I can't, we won't be able to tell that because
Right.
the statistic wise and MLS,
Sure.
but closed homes last year, this month was 418. Now, here's where you're right, Richard. This year now, last year's 418. This year, we're at 354 for July right now. So we're down a little bit versus the same.
I actually had my biggest month this month.
Yeah.
Surprisingly.
Yeah.
August looks to be about the same. So that is a positive.
Yeah. And I think, from like what you were thinking too, is even June of last year, we had a little bit higher numbers than we have June of this year.
Sure.
It looks like it's going down a little bit in the sense of, how sales are going. Last year, June, 702 sold in that month. This year, June, 642. So about difference of 60 houses. So little by little, it looks like it is tailing off, going down, right, in sales. So I thought that was pretty interesting. When it comes,
you think that's buyer confidence, or do you just think what are your thoughts there?
No, that's a good question. I think it has all to do with probably rates,
of course,
inventory. It's still short for us. It's just, listings aren't out there as much, and if they are,
10 buyers for every house, it seems like.
Yeah, absolutely. I think Aaron just this week listed 3. I mean, she's got multiple offers on every one of them within days.
That's great.
Yeah, it's good. So, it's still out there being competitive, and I think with the rates too, it's gonna. Some people maybe are getting discouraged. I don't know. What do you think? Do you think that is happening?
I think that, and I think a lot of things. We had folks that were qualified a few months ago at say 3%.
Mm-hmm.
Now they're over 5%,
mm-hmm.
and the house has gone up in value 40,000.
Yeah,
so these folks can no longer buy the house they need for the size of their family. So I think it's kind of on the sidelines, hoping for a drop in each. Maybe by the beginning of next year. I've got a few people like that are in hold mode, so to speak.
You got us like that.
Right.
Me and Brittany, that's the same. Like I keep pushing. I'm like, look, the house we got now, we can't buy, right now at the same amount and rate.
Right, that's right.
So
we're going to sacrifice something. Yeah.
Yeah. We'll have to sacrifice something for sure in price, no doubt. So, so we're just kind of hanging out for a little bit, see how things go, for our next house. But yeah, that's interesting. So I don't know. We'll see. Everywhere I've looked and talked to other people, I don't think anybody's got a clear kind of picture of what's going to happen. Like, hey,
one day to the next, literally one day to the next.
Right. Yeah. It's really weird.
Yeah. I've never seen it like this. So much uncertainty and literally knee-jerk reactions every day, multiple times daily. Yeah. It's something else.
Yeah, absolutely. So interesting to see, so we'll see how it goes. I know one thing, you and I will be here.
That's exactly right.
We'll be here and we'll be going through it, whatever it is.
We'll figure it out.
Yeah, exactly. That's what I said. All right. Well, look, that's all I had today, Richard, unless you got something else. We pretty much
that's good.
Wrapped up here, man.
Good stuff. Yeah, good stuff. Good information.
Absolutely. All right. Well, look, always thank you, Richard, for taking the time to be on the podcast.
Thank you. Always a pleasure.
Yeah, and hopefully everybody got some good info here from us. So, all right, you take care. You have a good week.
You as well, David. Thanks, sir.
All right. Thanks, Richard.